Welcome back to the channel. I'm Foreman, and this week I'm going to be telling you the UK stocks that I'm buying right now. And if you like the video, please drop one of these to help beat that YouTube algorithm, or even drop one of these because YouTube have for some reason removed the dislike counter. I can still see how many times you've disliked it, so feel free if you want to click the dislike button in protest of what YouTube has done, because I quite frankly feel that it's censoring kind of the speech that you guys may want to express. For instance, if I make a bad video, I would like to know. I mean, obviously some of you will send a comment and let me know, and it's much appreciated, but at the same time I'd want to see a gauge of how the videos perform in the community, and the dislike button is such a good indicator of that. This week has been a very, very volatile week in the markets. We may be looking at a potential correction incoming, and this is only my speculations. It does seem to be over fears of the pandemic resurgence, which I think honestly is utter rubbish. I don't think this is what's causing the markets to drop. Rather, the likes of quantitative easing is starting to slow down, like the asset purchasing plans or programs by the Bank of England and the Federal Reserve in America, meaning that obviously growth stocks in particular and a lot of the stock market are out of favor. People are going down the risk chain, so therefore there's a sell-off in, for instance, the likes of cryptocurrencies. For example, as of recording this video at 5:30 p.m. on Friday, Bitcoin was down 6.67% for the week. In contrast to the FTSE 100, according to Google Finance, that only dropped 2.49%. The FTSE 250 had dropped by 4.06%, and as of recording, the S&P 500 had dropped by 2.03%. My portfolio has been somewhat resilient. I don't think I can really say that, considering shares have dropped by 4.88%, but when considering 20% of my portfolio is very much tied to the likes of Bitcoin, and my biggest holding had fallen by a greater amount than all of those markets and Bitcoin, it does seem a bit weird that I'm still somehow hanging on by a thread. Although I have no concerns about the volatility, I eagerly look forward to it. Volatility is a great opportunity to be buying. At the moment, I'm still trying to sort out my payments so that once I get back into the rhythm of things, hopefully by the end of next month, I'll be able to start building a cash position if I do not see sufficient value. However, I largely anticipate that I'm going to be putting a lot of money into the markets over the next few months, because it does seem like there will be some bargains to be found. So hopefully you've got some powder dry and you're able to take advantage of this. And if you haven't, start looking towards building some cash or start making some purchases. It would be a very wise idea, because I think the markets may be in a downwards trend for the foreseeable future. I'm not going to try and predict how long it would be. And if you've got cash available to buy the dips, then hey, you're in a good position, especially if you don't need to rely on that cash in the short to medium term. Another thing to note is that you should be building a shopping list. If you haven't already got a shopping list, I'm not saying, Santa, I'd really love a new race car toy for Christmas. No, I mean in terms of your stock market holdings. So that means you should have a watch list of stocks. In my opinion, I've got roughly 31 stocks sat on the watch list, and if I see them drop below a certain price, I'd be tempted to buy. I believe in only holding a small number of stocks, a very high conviction, because I think you can only invest in like your 5 or 10 best ideas, and as you start having your 50 best ideas, you're going to really run out of good ideas, and I think that's really going to be a detriment to your performance in the market. So make sure you've got a watch list of some kind. The Bank of England's chief economist hints at an interest rate hike. Usually we get this idea where they hint at the idea, ooh, we're just going to slowly press that to the media, people become comfortable with the idea and they expect it. They're on about the idea of raising interest rates to 0.25%, which, yeah, the problem is when you raise interest rates, or for instance last month when they didn't, keeping interest rates low suggests that the economy is in a bad position. Therefore, it loses sentiment in the markets. Or if we see a rise in interest rates, if the stock markets anticipate that, we're going to see a somewhat pullback in the markets, because equities look less valuable. Suddenly, more people are like, I could save money in a bank account and get 0.25% returns on my money. That's fantastic. Obviously, that's very sarcastic, but over a longer term trend, if we imagine that we're going to consistently see increases over time on the interest rates, then this would make obviously stocks look less attractive over time as well. I personally think, and this is my own speculation at most, where I have absolutely little to no knowledge of macroeconomics, but I feel that the interest rates will stay very low for at least a decade. I think, yeah, maybe we'll recover up a bit. We might hit into the 1 to 2%, but I don't think we're going to go much beyond that, and I don't see a reason for it, at least so far. But there is quite a high demand, and the supply isn't keeping up with the demand, so we may see prices get pushed up higher and higher, but it will be a very interesting point in our lifetimes, and hey, this is a very good time to be learning, absorbing as much information as possible, because this, at least for myself, is an earlier stage in my investment journey, and I think I can learn or try to learn as much as possible from it and really do quite well. Boohoo, my biggest holding, is down 7.11% this week, which is quite surprising because I thought they'd seen, I thought it was going to hold roughly at £1.80 per share. I have little to no concerns about this one. I'm getting a lot more comments from you guys going, are you sure Boohoo's a good investment? I really don't like Boohoo, or Boohoo's a falling knife, don't try to catch it, it's a bad stock, get out. And I'm just like, I'm not bothered. I've done my research. I have very high conviction on the likes of Boohoo, and I think they're set and well positioned to do well in the future. After all, there are a lot of concerns that are either industry-wide or not exclusive to Boohoo. They do have their own problems, but I think these can be ironed out in the medium to longer term, and I think they'll be a fantastic growth stock going forward. One, however, perhaps contrary opinion to this is I have the Boohoo Man app. And as you may know, it's Black Friday, at least as of recording this video. It's also my birthday. But Black Friday, and I've had something like 7 or 8 notifications so far in the day as of 5:30 p.m. And it's usually the same tagline, up to 99% off. And I think what's happening here is that, at least myself, I'm not really clicking it because it's up to 99%. I'm not really that interested. Perhaps maybe I'm a little bit too detached from the demographic that Boohoo tries to target, but I feel that because they're repeating these same taglines, up to 80% off, and because they've exaggerated the numbers so greatly and there isn't a good enough variance, I just look at it and think, oh, well, is it actually a good deal, or are we just wasting our time? So I think Boohoo does need to really look at their business model and perhaps their marketing in particular, but then I'd be eager to see in the next trading update how this has performed. By all means, I may be proven completely wrong. But I still believe in that putting my money where my mouth is. I'm bullish on Boohoo over the longer term, so I bought an additional roughly 139 more shares, which is a purchase of 67 and 72 shares individually, with hopes to continue building this position. It's below my average price. I think it's a very attractive valuation, considering shares are something like 1.4, 1.5 times sales or their overall revenue. And it definitely seems like at the moment, as growth slows and inflation remains high, the market seems to be more focused on the earnings and profits of companies rather than just the sales. So Boohoo's short to medium term EBITDA, or earnings before interest, taxes, depreciation and amortization, is obviously being squeezed due to the supply chain logistics and other factors like their high investment into their ESG, and so it does make sense as to why Boohoo is struggling at the moment. But I think this is primed to do well over the longer term. And if you want to know anything more about Boohoo, I'll leave a card at the top right of the video. Furthermore, if you'd like to sign up to my stockbroker and get a free share worth up to £200, sign up to Freetrade using my link description down below. Argo Blockchain had actually done something well. They rang the bell at Nasdaq today, which is a little bit interesting. As we can see here by Peter Wool, it did seem to impact shares quite positively on the day of trading. But I think at the moment I'm trying to disregard very much so what the CEOs try to say, because it seems like they're in that position mainly to market themselves, and quite frankly they are usually very, very skilled at doing this, and so I take what they say usually with a grain of salt. This is something that I've only recently started to think about, but I believe it's advice that Warren Buffett himself takes as he tries to avoid interviews with CEOs. I believe this may be another famous investor, because at the moment I am reading a book written by William Green called Richer, Wiser, Happier. This is how the world's greatest investors win in the markets and in life. I think at the moment I'm on about chapter 7. I'm just starting that, which is nearly at the end of the book. And there has definitely been some advice that I've picked up from it. Again, the link will be in the description down below. But it definitely seems that CEOs are very much marketing to obviously sell their business. They want to sell this vision to shareholders and investors. They want people to be buying in, and obviously they want a positive outlook in the media. And so the likes of Peter Wool himself, I'm still skeptical, because the management have to do substantial dilutions, and they have done so in the past. They've really milked it, to be honest. And that small director purchase that happened last week of something like £1 million worth of shares really does not mean a lot to me, because in the medium to longer term outlook, Argo Blockchain needs 1.5 to 2 billion US dollars in order to fully kit out their Helios facility. And how are they going to afford that? Are they going to sell their hodl on their balance sheet? Maybe trim a little bit, but very unlikely. Are they going to offer senior notes like they have done at an interest rate of 8.75%, which I appreciate they've done that and not diluted shareholders, but it definitely seems that this investment is becoming a worse quality over time. It seems like they have to take on more debt. They don't have the capital available to invest into their projects, and it certainly looks like a riskier investment to me. I'm personally not buying any more shares of Argo Blockchain despite the significant discount to my average price. I don't see a reason to sell because I do think their longer term outlook is promising, but I do think investors like myself are concerned over future or further dilutions in the future of the shares. So I am obviously sitting in the back seat a bit. I'd very much like to be buying more Boohoo shares, and even my other holding, Games Workshop, is starting to drop down to quite an attractive valuation where it's sitting at very close to my average price. I hold 75 shares of Games Workshop, and I've been currently reading through their annual report, and I've been very much taking notice of their remuneration, how much they're paying their CEO, and basically overall combining all the benefits like their pension contributions, their exceptional performance bonus, which is equivalent of up to 150% of their base salary on top of what they earn, obviously. And it seems like they are already significantly underpaid compared to companies of a similar size in the FTSE 250, and that is stated on the annual report. It is also interesting to see how Games Workshop tries to or plans to be a company that will be around forever, and I think that's something that really aligns with my long-term visions, and so I'm very much bullish on this stock. It is my highest conviction stock after all, and I've still not really been following too much with the community, but as far as what I've gauged, I've had a comment mentioning that apparently those that are in the Games Workshop community, at least the content creators, seem to have a slightly more positive outlook on Games Workshop as a company in more recent months, but they've always sort of had a reason to dislike the company. It'd be nice if they could really bridge this gap and solve those solutions, but then there's always got to be something, in the background that's likely not as attractive. I likely won't be buying any Games Workshop shares unless Boohoo starts to rapidly recover. In that case, I would be happy to start putting my money into Games Workshop, or if Games Workshop drops a little bit more, then maybe I will be buying a mixture of both, because I think both are at a fantastic level. I think both have good growth opportunities ahead of them, but I think Boohoo at the moment has a greater margin of safety, is priced a lot more, is priced at better valuation, so I'm putting my money into Boohoo first. However, once Games Workshop and Boohoo begin to recover, perhaps we're looking, this could be 2-3 years down the line. For all I know, we could be an extended growth market, we could be in an extended bear market for growth stocks. And so this could go on for a while, and I will just keep plowing the cash into these investments because I have high conviction. I will continue to research them, read the annual reports, read the shareholder letters, just get on top of everything so that I then can accumulate the knowledge and know, okay, shares are down 40-50% from all-time highs. This relates to Boohoo. Am I missing something? Has the market identified something that I'm not aware of? Well, actually, perhaps not, because I've read this in the annual report of 2018. It shows how they're looking for the longer term growth and they're looking for sustainable profits over, etc. You get the idea. Having more knowledge and having reading all of these things like annual reports could, I think, and in my opinion, can really greatly improve your conviction, and then you'll know whether to buy or sell the drop in the markets. I think building cash is a very important thing to do. I would love to do so because I do feel that the markets are looking a little bit negative at the moment, but whilst Boohoo and Games Workshop are down anyway, and I'm getting paid on a monthly basis from my income through my job, I may as well just keep putting the money into these stocks, and when, as I say, the valuations become less attractive, then I'll start building cash on the sidelines. As for my self-invested personal pension, or pension plan, however it is said, I'm still holding Dunelm Group and LSEG. They've had some volatility, but overall, my SIP is in the green. I am looking to transfer my old pension now that I've sort of changed providers, and that'll be roughly £800. I'm going to transfer into the pot. Then I'm going to be adding a few more dividend stocks, and hopefully we'll get some more entertainment value from these companies, although I've not really been following them too much at the moment. One stock I did sell a month back or so was Team 17. Team 17 is a video games developer, and interestingly, news on Bloomberg, Frontier Development's a stock that I was very much interested in through their development of Elite Dangerous and many other branded games. They've had Jurassic World, and they released this game. They had one before, I believe this is the sequel of it, and basically, apparently it's had a very poor debut. It's not done very well, and it sent the shares down almost 40%. I think valuations in this industry were largely propped up because of how well they had done during the pandemic. They've had a valuation re-rate through the expansion of price multiples of their, for instance, price to earnings and price to sales, and so they were trading at a significant premium. This could obviously damage their revenue by a significant amount, but will it damage it by as much as 38%? I'm not too sure. And it is likely going to be a difficult industry to be competing in, as perhaps more people would be looking to go outside, go outdoors, and, see a little bit more of the outdoors after we've had the lockdowns. Although we are entering the winter season, I imagine this is the better time of the year for these types of video games companies and in this industry, so it will be interesting to see. And obviously, if Frontier Developments continues to drop, or even if Team 17 follows a similar trend, I may be looking to buy back into this industry at a better price if I have the capital available. And if you'd like to see my free UK stocks to buy right now in December 2021, then click the card at the top right of the video. Thank you for watching. Have a fantastic weekend.